All right, you're going to need to know the parts of a fraction, the numerator and denominator. Numerator's on top, denominator's on the bottom. You need to be able to change fractions to decimals, decimals to percentages, percentages to decimal, and decimal place values. When it comes to real estate commissions, they're often shared by the listing broker, the listing sales associate, the selling broker, and the selling sales associate. Percentage applied to selling price, cost, and profit. So what is profit? It's the amount that you make over and above your cost. What's loss? Well, it's what you sell below what it cost you. You took a loss. The profit and loss formula is basically the same, and it's easier rather than reading all the words. I like my little formula that I created. P divided by C equals the percentage you're looking for. So if you're looking for profit, you use a P. If you're looking for loss, you use an L. Very simple. P over C or L over C, you're going to get the percentage of your loss or your profit. Preliminary steps to closing, you have earnest money deposit, loan application, contingencies, appraisal, loan approval, title insurance, inspections, there may be some required repairs, survey, hazard insurance, your pre-closing inspection, that's your final walkthrough. Reviewing the closing documents, the buyer is going to be given the amount needed to close, and the earnest money, if not already at the closing agent, will be transferred to the closing agent. The closing statement or settlement statement formerly was called the HUD-1, but now it's called the closing disclosure, is a detailed accounting of the funds in a real estate transaction. Who's paying what, what's being charged, all that kind of stuff. Now, some of the entries on that closing statement are shared between the buyer and the seller. All right, in your math, you're going to have prorations. That's what we were talking about in the last slide about being divided by the buyer and the seller. And to prorate means to divide various charges and credits between the buyer and the seller. Contract should specify the date and timing for prorating items. The day of closing belongs to the buyer unless stated otherwise in the contract. And when we're doing prorations, the dollar amount is always the same. If you're debiting a party $100, you're going to credit the other party $100. So, should you get a proration question and you've got answers, credit, debit, credit, debit, credit, debit, it's not going to be, let's say the $100. If you've got debit seller $70, credit buyer $30, that's never going to be right if the numbers are different. So you can eliminate those two. They have to be same. Now, with the prorations math that you do in this course, they deal with taxes, which is on a year, rent that's been collected, which is on the month, and also assumed interest. All three of those will be a debit to the seller and a credit to the buyer. And an easy way to remember that is to put it in alphabetical order. B, C, D, S. Buyer credit, debit seller. If you can't remember it any other way. We talked about the type of prorations you're going to do in this course. Now, the proration methods is based on a 365-day method, the actual number of days in a year. Now, you're going to have to memorize those numbers of days in a month of a year. And it's going to make a difference because they will try to distract you by, if you think it's got 30 days or you give the day to the wrong person, they're going to have the right, wrong answer. Now, the easiest way for me to remember it is that they're opposite. It's always 31-30 basically. Okay? But there are exceptions to every rule. So you start out with 31 and you're going to end with 31. January's 31, December's 31, and then you're going to go opposite. Now remember, February is going to be 28 or 29 days. But other than that, they're going to go back opposite. 31-30, 31-30, 30, except for July and August. Both of those have 31. So if you just start on your piece of paper and go, okay, January's 31, 31, 28, 31, 30, and line it down. And when you get to July and August, put 31, 30, and then start with 30 again. You'll be okay. Trust me. There's some people that do the knuckle method. There's all different kind of ways to remember how these, but that's the easiest way for me. Some things regarding closing is double entry items. Okay, that's your debit and credit. Now the exceptions where it only appears for one party is the buyer's deposit. Quite often they'll ask the question, how does the buyer's deposit show up on the closing disclosure? And they got all different kind of ways. It only appears for one party, and it appears for the buyer as a credit. Most people think, oh wait, the seller's going to get it, so they must be credited. No. No, 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 no. It's the buyer gets credited for bringing that money. That's that much less money they got to bring it to closing when they come on closing day. So think of it as opposite. If you were paying your credit card bill and you sent in a payment, don't you want to see it credited to your credit card bill so next month your bill's lower? It's the same thought process. Other things that will be appearing for only one party would be existing mortgage that's being paid off, new mortgages obtained, expenses, doc prep, recording fees, broker's commission, and title insurance. This is another important one, and they like to test on. When it comes to things credited to the seller, there's always only two things. Purchase price is credited, and any prepaid items. Prepaid items is things they paid in advance. Okay? Those are the only two items that's credited to a seller. Now, debited to a seller would be mortgages assumed, paid off or newly created, prorated taxes, interest, advance rents, security deposits, state documentary stamps on the deed, broker's commission, title insurance, preparation of deed, and seller's attorney's fees. Items that's credited to a buyer, earnest money deposit. Remember I told you that. Don't forget that. It's only on one side, and it's credit to the buyer. They like to ask that a lot because people kind of get that a little mixed up. Yeah. Prorated property taxes, unpaid interest, and advance rents, and security deposits. Items that's charged, debited to the buyer. Purchase price, title insurance, state intangible tax on new mortgages, state documentary stamps on new and assumed mortgages or notes, recording of the deed, recording of the mortgage, the buyer's attorney's fees, and preparation of the mortgage and note. There is a lot of math in this chapter, and instead of putting it in here, I put it on YouTube where you could listen to the same one over and over again without having to search through the presentation, the lecture. All you got to do is go to youtube.com and search for Marlene McKinley Real Estate Math, and it will come up. I've put it in its own little thing so you can hit subscribe, and it will bring them all up for you. If you have any questions, don't hesitate to contact me.